let me just double check. Yeah. Hello. I think I think my screen should be visible now and I should be audible now. Once again, maybe if the first few minutes were missed, my name is Thomas and I'm here and I will conduct the following webinar for you today, guys. Please prepare your questions. I'm very happy. I would be very happy to answer them. What else? What else should I say in the beginning? Well, everything is good. The markets are active. Well, pretty much like almost just almost every day. So basically, one of the most common questions I get asked oftentimes is, what is the best day for trading? And in fact, that's my personal opinion is that, well, basically there is not really so much difference between any day of the week. So you can trade on Monday, you can trade on Tuesday, Wednesday, Thursday, and Friday. Like normally, there is the common kind of like a more common thing that maybe that is more applicable to stocks trading, that Tuesday, Wednesday, and Thursday are the most active days on the market, and Friday is like Friday, so it's a little bit more quiet. But I mean, like, even if you do trade stocks, maybe not with our broker, but somewhere else, so there usually is some. There are almost always, like in 90% Fridays, 90 Fridays out of 100, there is something to trade with. So some trading activity on Friday, some trading ideas. And what I like about stocks, especially trading stocks market, is that there are so many different opportunities, so many different trading ideas, and even if you don't have, if you don't see, like something is not moving that much today, well, definitely something will start, something is going to start moving and trading actively in the next few days. Now, guys, what is going on in the world today? So, if you have any questions or any topics that you want to share, feel free um, to let me know. So what is on the markets? Well, now we want Forex overview. Okay, bro, is this trades 100 profitable? Well, one common concern that people ask about trading is that how many profitable trades should be, oh, how many trades should be profitable. So my typical take on this is that when you trade Forex, you don't really need, well, and that's probably a topic for a bigger webinar dedicated to this topic. Maybe we'll do it next, well, maybe, I don't know, maybe next week or something. So yes, when you trade Forex, you only need to have 30% of winning trades, provided that your profitable trades generate 4 times more profit than your potential stop loss. So let me demonstrate you on this example. So in this example, my take profit was plus 190%, and my stop loss originally was minus 50%. So it means that my potential, my maximum loss on this trade could possibly be not more than, couldn't exceed, like could not possibly have exceeded $500. And my potential profit, I was aiming at 1,000. So I was aiming at close to 2,000. So in the end, it turned out 1.9 thousand or 1,900. But nevertheless, it is almost 4 times bigger than my potential loss in this trade. So minus 50% or plus 200%. That should be a 4 times different, at least 3 times difference. Now, of course, you cannot get this such a ratio always, but you should aim for it. And if you manage, that requires a little bit of skill and a little bit of market knowledge and market practice, is that eventually you will start getting there, and you only need, like I said, 30 to 35% profitable trades on Forex. That's the bare minimum, and that will be more than enough to remain profitable. So that is your break-even point. I think on Forex it's close to 20%. So, but if you still manage to have one profitable trade out of 5, so that will give you say plus $2,000, and for losing trades that will be minus 500. So 4 multiplied minus 500 equals minus 2,000, and that gets us the break-even point. So that is the bare minimum that you need. So, but that is pretty realistic because that is 1 out of 5 trades. So it's not even I'm not even talking about 50% winning trades, right? So that is the beauty of Forex, which I like. And what else I like about Forex is you just open a trade and let the market do all the job for you. So you don't really need to concentrate. You don't really need to, watch the screen, watch the webinar. Uh, it's it just happens automatically. You just open a trade, and from time to time you just update your take profit, stop loss. Now my current PNL, my current unrealized profit or loss equals to plus 35%, so I can move my take profit a little bit, or sorry, my stop loss a little bit up, so that I will not lose more than so I will still, even on worst case scenario, I will not get less than 5% profit from my trade. Now 5% of course is nothing, and that totally violates the previous rule that I mentioned. But for open trades which go into the profit, it is advisable not it is advisable to move your stop loss to the break-even point, so plus 5% or something, or plus 0%, so into the like break-even point, in order that like you don't want to give away to the market a lot of your gains. Okay, so I hope I explained myself more or less clearly, but if you have any questions, let me know. So what is going on today? We have some interesting news coming in from the European Union, and the European Union has announced that they have finally agreed on a market cap, and so this market cap on oil, and that it will not exceed $60 to $65 per barrel for the Russian oil. So it means all the oil that was or will be gotten in Russia, will be extracted in Russia. It will not be able to be sold in the European Union for more than, well, probably $60 or $65 per barrel. So it's kind of like this range, and countries get to decide price they at which price they will be able to purchase this oil. Now, this is not a typical market measure that you would think in a global market where everything should be priced on the market during trades. Now that is a very interesting thing, and that is not really common to the world economy. And I don't think that such kind of principle and such kind of story ever existed for a long time and was successful, but we will see. It is a very interesting story, and it will be unfolding right in front of our eyes. Now, at the same time, after this news has been announced over the weekend or on Friday, I think, yeah, it was announced on Friday, and today the market, even though we had a gap down today, like gap up, and then we moved down a little bit, but now oil is gaining plus 2% today. So we'll see how it will affect the oil prices. Now, another interesting story which I want to mention is the so-called US crude oil in the Strategic Petroleum Reserve. So these stocks, so Strategic Petroleum Reserve stocks in the United States, they are down to 389 barrels, well, all the way from more than 600 million barrels last year. So we are seeing a 35% drop over the year, and it's more easier to see on a global scale, even though it was kind of downtrending from 660, and now we are down to 389. But it's not that big of a problem, because what I can see now is that the process has significantly slowed down, because since October, since the first week of okay, so since the last week of September, uh, they only have been reduced by 27 million barrels, comparing to something like, well, from July and to September. So that rate was okay, so something like 50 million barrels. So 50 million barrels versus 25 million barrels. So we see double double the speed during the summer months. Now the situation has slowed down, and potentially it suggests, so this number suggests that the US have figured out the way how to slow this process down and how to get more oil from somewhere else. Of course, no one is gonna tell you where they're getting this oil from to replenish it in the strategic petroleum reserves, but things are as they are. That's they get they managed to slow down the speed of depleting the strategic petroleum reserves. And that is, of course, a very good news for the oil market. And I mean, it's a very good news for the bears who short oil, and also for the consumers, because us, I drive a car, right? I have a car. I buy products, right? We are all consumers, and for us, cheaper oil prices usually mean something good, because we can afford purchasing more products, and thus making sure the quality of our life gets a little bit better. So you never want to be in a situation where your oil prices are too high and you cannot afford, filling up your car, and you cannot afford driving to your office, even though now most of us, or some of us, work remotely and have been remotely since 2020. Oh my god, it's been 2.5 years since the beginning of the pandemic, or even more, since the remote office has become the new norm. Now, what I suggest right now in regards to to the oil market, I suggest to wait out, because as of now, I don't really see um, anything interesting right now. But quite soon, we are going to be nearing the $90 mark. So that is going to be a very interesting level, and also we can have 85, right? And right now we are exactly in the middle of this channel, in this corridor. So I don't really suggest opening any trades with a big stop loss, because if I wanted to open a trade now, I would have to place my stop loss somewhere here, more than $1 below. And what I like doing in Forex is I like to set my stop loss to the minimal possible uh, distance from the opening price, to ensure I have this good ratio of risk to reward. So I don't risk more than, that with my profitable trade, I can cover up the losses of my, say, 4 trades, right? I don't want to be in a situation where I risk a lot and I potentially can gain very little. It is the opposite. I want to potentially risk a little bit and potentially gain a lot. So that is my market mentality. Risk a little, get a lot. Risk a little, get a lot. Not other way around. You don't want to be risking a lot, then opening a trade, taking your quick profit, enjoying the moment, and then realizing that if you hadn't closed this trade, that trade would have generated you 4 times as many profits, right? That is the basic concept of trading, and especially forex trading. Now, when you trade FTT, the FTT mode of trading, of course, that's something different, because on FTT mode, you don't really depend on the. It doesn't really matter how much the price changes. You just open your trades. They basically vary by, like 1 2 pips is more than enough. Like if you enable flat market protection, then you need 2 pips difference. If you don't have this mode enabled, then any change, like even the single one pips is more than enough. Right. So, what is happening today on the market? So, the economic calendar. So, let us have a quick look at the economic calendar. And once again, I would like to highlight how important this market calendar is. So, this week, and so we had the composite PMI in the GBP, not so much important. ISM at 6 p.m. my time, so GMT plus 3. ISM manufacturing in the US. Maybe it will be a little bit interesting. Now, something interesting comes from Australia. Okay, so it seems like they have everything is a little different. So their current interest rate equals 2.85%, right? Uh, which is relatively big. I mean, since 2010, these interest rates have remained as little as, well, close to zero. So we can have a quick look at the history, so some historic look, and yes, exactly. See, since we are seeing the highest trade, I'm not talking about 17%, I'm talking about, like, yeah, well, they had like 5-7% back in 2000, right before the world crisis of 2008, and since then this trade has been very, very small. So the central bank, the Reserve Bank of Australia, was trying to stimulate customers to get some cheap loans, and with these cheap loans, they were hoping that that will boost consumption. So that is the paradigm of the well, most Western economies, especially that, and probably most of the countries, I would say, like 95% of the countries, they aim for more consumption. Probably like 99% of countries, they target consumption. That consumption has to remain at high levels. So because if there is consumption, there is also production. Okay. So the reserve, the RBA, and we will soon see, we're going to see, yes, this is, well, from 0.1%, we are up to 2.85%. And yes, so we are back to the 2012 levels, and probably this rate will be increased. The main the essence of this story is that there will be a lot of movement. So for those of you who will be awake during these times, so you can easily trade this news, and a lot of action is guaranteed. So construction PMI, I wouldn't say it's too much important, even though they have 3 stars, both these news, this one and this one. From my experience, not as strong, for example, as this one, RBA interest decision. Now, GDP from Australia. Okay, it's the Australian week. So GDP Australia, very important, and we are going to see a lot of action on the USD, AUD, USD, so the Australian dollar against the US dollar, and all other and many other currencies as well, with all of them have the Australian dollar in them. So the interest rate in India. So India, like almost, I would say, like almost all the countries, central banks are now raising the interest rates, and this interest rate can go all the way up to 6% and maybe even above. And just today, just this morning, I read some interesting news saying that by 2030, the Indian economy will have become the third largest economy in the world, behind the United States and China. And by 2030, the Indian economy will have surpassed the UK and Japan, well, the UK, sorry, German and the Japanese, because now the Indian economy is bigger than the British economy already. So this year, it happened just a few months ago. Uh, Now, what else? So we talked about this news, interest rate in INR, yes, and once again, it's the week of interest rate decisions from from many parts of the world. Now it's Canada again, a lot of action guaranteed. GDP Japan, yes, 100% guaranteed, a lot of action and a lot of movements. And well, Friday will be a relatively quiet day. So once again, it's Monday, Tuesday, Wednesday, and Thursday are the most active days on the market. But also, I have to mention, I have to remind you that we also have these um, that we also have assets which are traded 24/7, some OTC assets on the weekend, OTC currencies, and we also have indices which are also traded 24/7, and you can also trade these indices. Once again, a lot of action guaranteed. They are very technical, no matter which trading strategy. So, for example, let me apply kind margin, and we are going to see that the so this index, the Arabian General Index, follows the rules of the technical analysis, and we can see that like here we could be getting like right from this when the MACD area went above the zero line. So that was an area of like potentially profitable trades, and you can do this kind of back testing when you just rotate the chart, when you pull it backwards and you go a little bit back into the past. And in this past, you can see that so we had some nice moves here, nice moves there, and you can potentially count. You can do some the so-called paper trading, like when you trade on paper, when you don't even open trades on your demo account. Instead, you just look at your, you just calculate um, how many potentially profitable and potentially profitable trade from 100 you could make, and then you start trading maybe on demo. And but I strongly suggest and I encourage you to go to the real account, go say $1 trade. It doesn't have to be big amounts, and you just okay, there is a signal, you open a trade, $1. It costs you nothing. It's like $1. You will not get rich and you will not get broke by trading $1. But that gives you the so needed the market touch, the market feel. You need to feel that you need to start feeling the market. You need to gain this intuition. It's not going to happen. Yeah, once again, another signal. It is not going to happen overnight. Like you will not get this market intuition in one day, but after a week, after 2 weeks, after a month, after 2 months, 3 months, and so on, you will start noticing more and more patterns that repeat themselves on the market. So you have to understand that trading is a system, and trading can be mastered and learned as long as you spend enough time practicing it and you spend enough time reflecting on your trades. So there are not so many shortcuts in this field. Now, guys, let me give you a brief look on the euro. So we can see that the euro has recovered more than 10% of its value against the US dollar since the very bottom that happened on the in the end of September. And since then we have gone up by more than 10%, which is pretty good considering how bad things are with the European economy and how, on the contrary, things are not so bad in the United States economy. So yes, the U.S. economy is also suffering from high energy prices and many other factors, but it's not that bad. It's relatively small. Okay, so that effect is relatively small, and we can see that yes, we saw this breakout from this. Let me draw it. So there was this descending channel, so trend line. We need to connect the beginning of this downtrend and yeah, something like this. And we can see that right here there was this breakout moment, and then there was an attempt from the sellers to like there was this level of resistance at 1 at the parity level, and nonetheless the euro managed to stay strong, and eventually it broke above the um, it managed to break above the this level, and then finally we have seen a quick rise all the way up here to where we are trading. A question from the chat here. Have you ever tried quickly or 5-second trading? Yes, of course, I have. I still don't really recommend, trading 5-second trades. My personal approach to trading is really like a long-term game. So you shouldn't focus on short-term trades, especially. Well, I'm not even talking about 1-minute trades. For me, short-term trades is something like 3-minute trades. Everything less than that for me is like rapid, swift trading or rapid trading. It's quick. It's too quick. um, I don't like to be in this situation where I have to open this trade at this like very very exact moment. Instead, I just need to um, I need to give myself some time right now. Okay, so 3-minute trades. The signal is there. I don't have to be like watching every tick of the chart. I I stay relaxed. At the same time, I'm pretty focused, but I'm focused on the signals from the chart. But I don't have to watch every single tick on the chart. So it's like you shouldn't really make yourself um, like nervous. Don't get nervous. Just try to stay as relaxed as possible. Now, so we talked a little bit about the euro. Now, what about the pound? And with the pound, the situation is pretty similar, I would say. We have recovered pretty significantly since, once again, September's lows, when one day the pound dropped more than 10% in one day, or it was a 2-day drop actually of 10%, which was a huge, and everyone was like, everyone was afraid for the England. But it seems that since then, the financial authorities of the UK have managed to do something about the economy, and now we are back at the summer levels, so mid-summer levels, which is also pretty great. Uh, Great for the UK. Now, another thing which I want to talk about is natural gas. So unfortunately, we don't have like 1 minute trade, or sorry, less than 15-minute trades. So the minimum duration is 15 minutes. So natural gas prices. So this natural gas price is 5.7, and this is the price of natural gas in the United States at Henry Hub. So it's not the European price, it's the American price, and we have seen a pretty nice drop from $8 and down to 5.7. So that is a close to 25, more than 25% drop. Very good for everyone who consumes a lot of gas. I'm talking about industrial companies and households. So probably this year's winter so far has been very, very mild, and that is why natural gas prices are remain relatively low. So today is the 5th of December, but we still have, I would say, like between 3 and 4 months of cold weather in Europe and in some parts of the United States, and uh, this upcoming winter will show how things will be with natural gas prices and other things. Now, before I finish before I finish today's webinar, I would like to go back to Brent, and I just remembered there was this other news that the Saudi Arabian government, the OPEC Plus countries, in response to the oil cap, the price cap on Russian oil, they decided that potentially they might have another output decrease in order to stabilize Brent or oil prices at relatively high levels. So that will be their next move, because no one wants to get less money for the same product. So now Saudi Arabia and Qatar, Saudi Arabia, and many other oil producing countries from the Gulf area, especially from the Gulf region, they are now enjoying huge profits uh, while selling the same volumes of gas, of oil that they were doing last year, but now they are doing the same, but at much higher prices. So their income, despite spending $200 billion on the World Cup, which is ongoing, and we are in the uh, quarterfinals now, I think, or should be entering quarterfinals, uh, 1/8 of the finals, and so the Qatar spent 200 billion on this huge infrastructure project, but they pretty much made back all this money probably within the few months this year, which is huge. So this is the upcoming week of today, guys. Do you have any questions so far? And well, going back to the Quickler question, well, possibly you can trade Quickler. There is nothing wrong about that. But I personally don't stick to long-term traders, short-term trades, because once you trade more and more, eventually you turn into this like lazy trader who doesn't want to open tens or say hundreds of trades that I used to do when I was just beginning. In the beginning of my career, now I'm very relaxed. I like to invest. I like to find some. I like to search for long-term ideas. Um, and I don't really trade that often in like short terms. So as always, we have a lot of interesting stuff here in our gallery. So we have webinars, we have contests, we have competitions. So guys, welcome to our platform. You can contact your customer support specialist, or you can contact your personal financial analyst from the VIB department if your current status is advanced or expert. And well, pretty much that's it from me today. I'm wishing you a wonderful evening. I'm wishing you good profits, and I wish you to learn from the markets and to make your trading better day after day after day. So, is it possible to grow a $100 account? Yes, it depends on your goal. And if your goal is to turn this $100 into $1,000, that is possible, but that is very difficult. So instead of kind of like setting yourself a goal of turning $100 into millions, I would instead focus on learning how to become consistently profitable. So once you become consistently profitable, and it doesn't matter which amount. So for example, you start with 100, just set yourself a goal to turn this $100 into 150 by the end of this week. That is a very realistic goal. It's not stressful. So once you manage to do that, 150, next week try to have an increase of another $50 or maybe $75 or maybe $100. So it's all, the key word here is gradual. So your growth has to be gradual. You don't want to be increasing your amounts like by crazy, like turn $100 into $1,000 in one week or even in 1 month. It's a little bit too unrealistic. Yes, it is possible, and some people have managed to do so, but it's still more it looks more like an exception from the rule, not the rule itself. So I would set more realistic goals and more achievable, more attainable goals. Because if you ask yourself deeply, like, can I turn $100 into $1,000 within 1 week? You will feel that it's a little bit an incongruent goal. But 100 to 150 is good. And once you manage to show this gradual and constant result week after week after week, then you can add $500 to your account. And from $500, now you set yourself a goal like $200 additional gain every week. And that is once again a more healthy approach to trading. And that is a more consistent goal. It can be even a more motivating goal. Okay, so a question about gold. Yes, I forgot about gold. So gold is trading. So we have broken above the Fibonacci level of 1. So as you can see, the beauty of the Fibonacci levels, 1, dropped to 61.8 and rose from here 104. Where will gold go now? So as you can see, we are trading right at this level of resistance. So I would probably now, what I would probably do now is I would definitely open some down trades, some short term trades, because we are trading right next to this level of resistance, and it seems to be like a huge level of resistance. And going back to the very beginning of today's webinar, I would like to remind you that this is what I started my webinar with, that right now I think you can open a down trade with a stop loss of $10, and your potential profit will be at least $40. So gold can drop all the way to $1,750, and thus you will, if this happens, you will gain 200 or 4 times your stop loss. So once again, this rule applies, and um, fundamentally, I don't see much about gold. Nothing interesting. Gold remains a very just, I don't know, it's a boring instrument. I think this year there are so many other active instruments that are worth mentioning, but at the same time, yes, now is a much better moment than, for example, even last week or 2 weeks ago when it was trading here and you still had to put a very long stop loss. Now is probably one of the best setups in the last few weeks. If I trade in uptrend and vice versa in downtrend, is it risky? Well, I think the word, you have to understand that when you trade any kind of asset on the financial markets, it is all risky. But risk is an inevitable part of the game. And a more correct question in this situation would be probably not whether it's risky or not, but it's more about how can I reduce my risk and how can I maximize my profits. So I would say that it's all about how you phrase your questions. So yes, guys, it's more about how you look at it, from which angle you look at it. Everything is risky. You can have an up trade and you can lose. You can have a down trade and you can lose. But at the same time, um, like I said in the very beginning of the webinar, uh, if you control your risks and you let your profits grow, if you cut your losses quickly, but at the same time you're letting your profits grow, your account will be unbeatable. Your account will be invincible. Will be profitable. There are no profits without losses. So losses are an inevitable part of the game, part of the trading game. So there is nothing wrong with losing some money, but you have to control it. You have to understand why you lost. Like, was it because your stop loss was in the proper place or not? Maybe you put it in the wrong spot, and that is a big problem. I'm going to open down trade on gold. What should be my multiplier? Well, that is a good one. So and once again, it depends on your risk. So my multiplier, so let's imagine 50. Well, it's all about, so x20. You have to understand that if if gold prices drop here and my by 3% and my multiplier equals 50, so then 3% multiplied by 50 equals $150, 150%. So let me just give you an example. Okay, so I've opened this trade. Now I can see where my take profit is and where my stop loss. So my stop loss is in the perfect spot, right above the high of the current candlestick on daily, and my take profit is somewhere here, which is also attainable by the price. It's a little bit under the 1750 mark, but still it is relatively close to it, and potentially we can move it a little bit up. Okay, so plus 173. It's not 4 to 1 ratio, but still it's like a 3.5 to 1 ratio, which is still relatively good. So that's how you trade. Yes, down trades, up trades. It's all about where you position, where you put your stop loss, and where you put your take profit. Um, and another comment here: we have to be patient. After a single profit, the greed to get more will make us trade without reading the chart. Exactly. So this feeling or this emotion is called tilt in trading, and you don't want to get yourself tilted. Like, you don't want to lose control over the situation. You always have to stay focused, stay motivated, know what your goal is. If maybe a good piece of advice would be to write a note, write a memo on a paper, and just hang it on your next to your computer, next to your screen, or look at it while trading, because setting goals is very, very important. You need to have a clear picture in your mind. What are you doing today? Am I trying to make, say, $100 today, or am I just learning the ropes? Am I mastering a strategy? Am I mastering positioning, putting stop losses and take profits in the proper places? What am I doing here? What is my goal today? So, am I trying to make a lot of money today, or am I trying to learn how to cope with losses and how to become a consistently profitable trader? So set this goal for your week, and writing down your goals is a huge instrument. It is probably the most powerful instrument out there, and you cannot believe me. You're not going to believe me how important it is and how strong it is. Um, Guys, that is going to be it for today. I would like to thank you all for watching my webinar today. I wish you all good profits, and I will see you next time. And adjust, just adjust your multiplier to your risk appetite. If you are a beginner, your multiplier, choose the minimal one, because you are not trying, because your goal as a beginner, not to make a lot of money, but to become a profitable trader, to stop losing money, to start making money. So start making money gradually, and then anytime you can increase the multiplier, and your profits will move along with the size of the multiplier, with the size of multiplier. So if you are an experienced trader, 200, 500 easily, but not in the beginning. In the beginning, I suggest $50 multiplier, or even less if it's possible. On our platform, it's not so possible with currencies, but it's possible with gold, with brands. So go pick some small multiplier. Right, now it's finally it. Guys, we have a trading webinar tomorrow. I will see you all there, and it'll be FTT trading webinar. So once again, have good profits, and I will see you soon.